Sun cast a shadow, a digital line is coming over the mountain and over your mind. Double down your Bitcoin, hang on for the ride. We're moving into the future, one block at a time. We're moving into the future, one block at a time.
Welcome to Once Upon a Coin, documenting the ongoing history of blockchain and cryptocurrency. And as always, I'm your storyteller, Jason Cassidy. Today's tale has us looking at a blockchain startup that in a very short amount of time enjoyed unprecedented levels of success and then suffered utter collapse. This is the story of Terra. And if we're going to tell this story properly, we really do need to start at the very beginning. In 2018, friends Daniel Shin and Do Kwon decided that they wanted to get into the blockchain industry in a big way. And they felt they had just the right idea and unique mix of talents to make it happen. Daniel had a deep background in e-commerce due to him founding one of South Korea's largest platforms in TMON. And to complement this skill set, Do Kwon possessed vast knowledge in the world of high-frequency trading and finance. Together, with these backgrounds and the ambitions to build something special, led the duo down a path that eventually had them launching Terraform Labs. And Terraform Labs was tasked with the creation, maintenance, and growth of Terra. Terra is a blockchain-based platform that aimed to showcase itself as an alternative to Ethereum and as a direct competitor to payment giants like Alibaba and PayPal, focused on creating a suite of apps that could be used within its dual token ecosystem. The first of these two tokens was the platform's native stablecoin, aptly called Terra or UST. And Terra was pegged to the US dollar, thus the UST ticker symbol. This meant that if things were running smoothly, one UST would always be worth $1. But there was one big difference though between Terra's USD stablecoin and all the other fiat-pegged stablecoins in the market like Tether or USDC. Terra was an algorithmic stablecoin, which meant that Terra wasn't backed by US dollars sitting somewhere in a bank vault. Instead, the backing for Terra's UST stablecoin came from its sister cryptocurrency called Luna. Luna was the platform's native free-floating currency and would play a leading role in use cases that the UST stablecoin just wasn't meant for. This type of setup for a stablecoin drew a lot of criticism and concern early on from the blockchain space, with one such example of this being Cyrus Younessi, head of risk at MakerDAO and a former research analyst at Scalar. However, these observations around the pitfalls regarding UST's composition were mostly ignored, something that the entire cryptocurrency industry would come to regret only a few short years later. Besides being the only backing for UST, Luna would also be used for other purposes such as paying for network transaction fees, staking via Terra's delegated proof-of-stake portal or DPoS, as well as taking part in the network's governance system where users could vote on proposals submitted to go ahead and improve the Terra blockchain. By April of that year, Terraform Labs was registered as a private limited share company in Singapore. They were now ready to go to market with their ambitious plan. The first step? Raise some money. A lot of it. And by August of 2018, Terraform Labs found themselves in the enviable position of having raised $32 million in a seed round that drew in curious investors like Hashed, Kinetic Capital, and Polychain Capital. What was even more impressive though was major crypto exchanges themselves getting involved with names like Binance, Houbi, and OKX all investing into Terra. You honestly could not get a bigger or better seal of approval from the industry here than Terra just did. They now had a ton of money to work with and the explicit blessing from some of the biggest entities in all of cryptocurrency. The duo quickly moved to garner support for their vision of Terra by leveraging their reputations and connections within the payment sector within Asia. To make a big splash in the increasingly competitive cryptocurrency landscape, they knew they had to bring out the big guns. And that's exactly what Daniel Shin and Do Kwon did. And how did they do it? The Terra Alliance. This was a group of 15 of the fastest growing e-commerce companies in Asia, all joining forces under one roof to help spur payments innovation on the nascent Terra blockchain. The alliance boasted some truly impressive names in Asia like Houbi Brothers, Carousell, Pomelo, and TIKI. Naturally, this news turned a lot of heads and netted Terra some considerable attention, which they then used and converted into some hype built around their upcoming Luna token sale, which took place in February of 2019. Terra Labs held a pre-sale in which investors were able to get access to the Luna token for just 18 cents USD, while its initial coin offering or ICO price came in at 80 cents USD, helping Terra raise a total of $62 million from the public. In April of 2019, the white paper for the Terra ecosystem was published and it was dubbed Terra Money. And in terms of technical origins, the Terra blockchain leverages the Cosmos SDK or software development kit. Shortly after its release, the Terra blockchain went live on April 29, 2019 with its Columbus launch of the Terra mainnet. Terra was now officially in the blockchain game and had already taken a seat at the high rollers table.
10, 9, 8, 7, 6, 5, 4, 3, 2, 1.
By the time the calendar flipped over to 2020, Terra found itself in a position where it had done a masterful job at building up serious traction for itself in the crypto space. A prime example of this is when Nicholas Platt, the head of research at Terra, announced the release of Anchor, the flagship app on the Terra blockchain that would introduce a simple yet robust savings product that users could wrap their heads and wallets around. Anchor offered a principal-protected savings product that took in Terra deposits and paid out a stable interest rate in return. To create this yield, Anchor was lending out user deposits to borrowers who in turn would have to put up collateral in the form of other proof-of-stake assets on top blockchains. So in essence, Anchor was generating its yield from the block rewards of some of the biggest proof-of-stake blockchains in the world. Anchor was well received by the public, which led to Terra's next release, and this was a big one, because on September 17, 2020, Terra announced the release of UST, their algorithmic stablecoin, which will be coming to both the Ethereum and Solana ecosystems. Little did the company realize that with their creation and release of UST, they would soon become the architects of their own demise. Terraform Labs wasn't done with its ambitious plans for the crazy world of crypto either, because by year's end they announced plans to bring out the Mirror protocol. And this innovation would see them taking the traditional stock market world and putting it onto the blockchain, Terra style. Basically, the Mirror protocol would allow users to mint crypto assets called M-assets that would mimic the value of popular stocks like Apple and Google. These M-asset tokens would track the price of US-based stocks in the stock market via an oracle system which would function in real time as close as humanly possible. And these type of derivatives are called synthetic assets. This marked the end of a very productive 2 years for Terraform Labs. They had made so much progress in such a short time that they started gaining the attention of the biggest entities in crypto. And they found themselves going into 2021 as one of the most talked about and hottest investments in all of blockchain. This all led to some truly explosive growth for Terra, and now coupled with the timing of the raging bull market, led to one heck of a green candle. Investors were now taking notice on the potential that the Terra platform held, and were jumping in to grab as much Luna as possible. The token price surged with the demand. Luna entered 2021 with a price of around 65 cents US, but by March 21st, the price per token had soared to $22 US, making for some pretty crazy growth in price in just under 3 months. And the good news just kept on coming, because in May of that year, Terraform Labs announced a partnership with Binance, arguably the biggest crypto exchange in the world at that time. And if you're into crypto, you know the power of a Binance listing. This momentum propelled Terraform Labs into a position where they were able to raise $150 million US in a financing round led by some of the biggest names in venture capital. The money would be used to build out future use cases while expanding the current user base. Daniel Shin and Do Kwon had done a heck of a job cultivating all the success for themselves. However, there was just one problem though. All of the noise that the duo had generated from themselves got the attention of a sleeping giant in the Securities and Exchange Commission, or the SEC. Having been quiet in crypto for the last couple years, the SEC was now rolling out several waves of enforcement towards crypto companies across the space. Terra was one of the first to receive a strongly worded letter from the SEC, with their issues revolving around the creation of the Mirror protocol, citing concerns that its operation violated federal laws. This led to a rather messy situation where Terraform Labs sued the SEC in retaliation for a subpoena that was issued to Do Kwon, compelling him to provide testimony to US regulators. And this in turn led to the SEC informing Terraform lawyers that they were seriously considering suing the company for securities violations. As the end of 2021 approached, concerns began to spread publicly about the composition of Terra's two-token ecosystem. The Luna token, which was free-floating, and its algorithmically controlled stablecoin, UST. Some people even pointed out in detailed steps how a well-financed, crypto-savvy individual could destroy Terra by exploiting a design flaw in the ecosystem, concluding that Terra was just basically one big ticking time bomb waiting to explode. In a now infamous Twitter thread, Do Kwon decided to opine on the subject himself when he dismissed the theory as one that was so void of any common sense it didn't deserve a serious response from him. And this tweet has now gone on to age about as well as a carton of milk left out on a hot summer's day. Despite the blistering pace of growth the Luna token had experienced in 2021, topping out the year at $99 US, the concerns about the platform's long-term viability were simply not going away. So it should come as no surprise that Terraform Labs kicked off 2022 by doing everything in their power to address these concerns, especially around UST, their stablecoin. This came in the form of a few initiatives, starting with the creation of the Luna Foundation Guard, or LFG, whose mandate was to build up reserves to support the UST dollar peg during volatile market conditions. The next step saw the foundation raise a whopping $1 billion through the sale of Luna tokens, with the funds being used to purchase Bitcoin to support the UST reserve system. The lead investors in this massive raise were Jump Crypto and 3 Arrows Capital. Terra also tried to calm growing nerves and create some good PR for themselves when in February they signed a 5-year, $40 million sponsorship deal with the Washington Nationals. Terra was now rubbing shoulders with Major League Baseball. Everything that takes place next in Terra's story happens very quickly and gets very, very ugly. Terra's newly formed foundation, the Luna Foundation Guard, went on a buying spree, purchasing a total of 36,768 Bitcoin by early April. Around the same time, some prominent crypto traders went public with their belief that Terra's two-token ecosystem was akin to a Ponzi scheme, and offered million-dollar bets that Luna's price would be lower in 1 year's time. Do Kwon took both these bets and made sure that the public saw. Kwon also found time to make friends by issuing a decree of war to rival algorithmic stablecoin DAI. Yet despite all this controversy, the price of the Luna token kept rising, hitting an all-time high of $119 by April 5th, 2022. But by the time the next month came around in May, all hell broke loose. The first signs of trouble showed up on May 7th when UST lost its $1 US peg, falling to 98.5 cents after a large series of dumps of the UST token on both the Anchor protocol and the stablecoin exchange protocol, Curve. Do Kwon once again came to the rescue via Twitter to assuage any fears of a UST collapse. This guy should have really just taken a Twitter break around now, man. Jesus. To remedy the depegging issue, the foundation pledged $750,000 in Bitcoin to market makers to defend the $1 US peg on UST, and another $750 million to buy back the Bitcoin once market conditions normalized. This plan worked for all of about 24 hours because by the very next day, UST lost its $1 peg again, and this time it fell all the way down to 35 cents US before making a small rebound. And once again, Kwon was on Twitter to keep the mood light during a complete meltdown. As the industry struggled to make sense of what the heck had just happened, some theories began to surface as to what transpired behind the scenes to cause all this in the first place, with some saying it was a George Soros-style hit job. The misery continued when CoinDesk released a story revealing that one of the pseudonymous co-founders behind the failed algorithmic stablecoin Basis Cash was none other than Do Kwon himself. And this just added to the utter lack of faith the market now had in Terra. Then on May 12th, shit officially hit the fan as Luna's price collapsed 96%, leaving it now well under 10 cents US. This disaster even triggered the temporary halting of the Terra blockchain itself, as the price of Luna had dropped so low so fast that the network could no longer protect against governance attacks.
The Terra blockchain, this is sort of the back-end software infrastructure behind everything that's going on with that stablecoin we mentioned and the cryptocurrencies that are collapsing this week. This is halted, meaning basically no economic activity can go on here.
The next to go were the premium exchange listings. The very next day, on May 13th, both Binance and OKX ended trading of the Luna and UST tokens. In an attempt to stem the bleeding, Kwon announced a revival plan that would include the creation of 1 billion new tokens that would be airdropped to existing UST and Luna holders. This plan then evolved into creating a fork of Terra, with the original Terra blockchain being rebranded to what is present-day Terra Classic and the Luna token to Luna Classic. And the new blockchain was dubbed Terra 2.0 and exists today as just Terra. And the new Terra decided to only bring forward the Luna token, deciding to leave the UST stablecoin behind for obvious reasons. Previous Luna and UST holders will receive Terra 2.0's new Luna token based on their holdings. Meanwhile, anyone who had aligned themselves with Terra in the past 2 years was getting their ass royally handed to them as the contagion spread throughout the industry. The aftermath of the Terra collapse saw some crazy stories come out, like the Luna Foundation Guard confirming that they had depleted their massive Bitcoin reserves from a peak of around 80,000 Bitcoin down to just 313 in a failed attempt to prop up the Terra ecosystem. Things were getting ugly. Terra's DeFi apps got absolutely decimated during this time, with over $28 billion being removed from the platform by users, most of whom never returned. The damage got so bad that it caught the attention of South Korean authorities, who found that upwards of 28,000 South Koreans were financially impacted by Terra's collapse. Rumors of possible fraud charges against Do Kwon began to pop up, and with him now being the undisputed poster boy for Terra, a gigantic bullseye began to form around his likeness. The next blow came on September 15th when a local court issued an arrest warrant for Do Kwon, revoking his passport and making an international plea to help bring him in, citing a belief that he was currently hiding in Singapore. Authorities kept track of Kwon, who by year's end was reportedly engaged in a high-stakes game of catch me if you can, as he moved from Singapore to Dubai and then finally to Serbia. This just wasn't a game that Kwon was meant to be playing long-term, because by March of 2023, it abruptly ended. Authorities in Montenegro arrested Kwon, who was caught trying to use falsified documents at an airport.
A cryptocurrency entrepreneur has been arrested in Montenegro. Interpol announced the arrest of Do Kwon, the founder of two cryptocurrencies, Terra USD and Luna.
As of today, Kwon is serving a 4-month stint in a Montenegro prison. He still awaits his ultimate fate as South Korean and Montenegro officials discuss the logistics of having him extradited back to South Korea to face trial. And what about Daniel Shin, the other co-founder of Terra, who had let Kwon take the media spotlight over the last couple years? Well, they've tried and failed twice now to get an arrest warrant issued for Shin, who is rumored to be in possession of over 154 billion won, or 115 million US. And what about Terra itself? Now, the original and new Terra still exist today, albeit in a reputationally impaired manner. Neither blockchain's likely to ever regain the trust of the public again, but they're both still out there to invest into if you feel like gambling. What a surreal story, and the lesson here is pretty clear. Untested technical and financial theories, with a lot of other people's money invested into it, with a lot of well-reasoned warnings being ignored, and a huge ego that cannot get enough of the spotlight. All the necessary ingredients for a colossal disaster. Let's hope that as an industry we learn something valuable from all of this in the end. I hope you enjoyed today's stroll down memory lane. Until next time, have fun and enjoy life, my friends. I'll be back soon with another incredible story to tell you.